Welcome back to Investing Talk Podcast. Today, we're going to be looking at telephone and data systems,
Mhm.
maybe better known as TDS.
Right.
You gave me a bunch of info about them, this Chicago telecom company.
Yeah.
And I thought it'd be good to break it down, you
Yeah.
know, so we can see what's important without getting bogged down in all the details.
Absolutely. All the sources you provided really do a good job of covering a lot of ground. Their recent performance, how are their finances looking, potential concerns, some strengths that they have, even what the analysts are thinking about them.
Right. Well,
So we're going to
right.
try and break it down and give you, the listener, some actionable knowledge about the company.
Okay, cool. So why don't we start with just like who TDS is. I see here they were founded in 1969.
Yeah.
They offer a ton of different services, wireless through U.S. Cellular and TDS Telecom, cable and broadband, TV, voice, even hosted and managed IP services,
Right.
serving something like 6 million connections across the country.
Yeah.
They're listed on the NYSE TDS.
I mean, right off the bat, what I think is pretty interesting is you don't always see this level of diversification with telecom companies, right?
Hmm.
Many of them tend to specialize in, a particular niche, whether that's wireless or broadband.
Right.
But having their hands in so many different pots could potentially be a strength. I mean, if one area struggles a bit, other areas might be able to make up for it.
Yeah, that makes sense. Okay, so let's look at the recent stock performance, because this is pretty interesting.
Okay.
The stock price has had some pretty big swings over the past year.
Yeah.
A 52-week range from $14 to over $41.
Wow.
Even just last month, it was bouncing around between 34.82 and 36.68.
Mm.
Looking back over the last 6 months, there's a general upward trend, but that was after a pretty significant dip earlier in the year.
Right.
But year over year, just a lot of volatility.
That type of price movement often points to uncertainty in the market. It could also mean there are some pretty big things happening within the company or even within the wider telecom industry in general. Um, the recent upward trend you mentioned, though, might suggest that investors are starting to feel a bit more confident. Perhaps they're anticipating some positive developments.
Interesting. Okay. Well, let's talk about their financials then. In 2024, they reported revenue of $4.96 billion, which is down 3.8% from 2023. But here's where it gets kind of interesting. They shrunk their net loss down to $97 million in 2024. That's a massive improvement over the $569 million loss in 2023.
Wow.
Earnings per share for 2024 were negative 0.85.
Okay.
And, it looks like these numbers are being affected by both their investments in upgrading their network infrastructure
Right.
and strategic divestitures like the sale of OneNeck IT Solutions. What do you make of this, lower revenue, but the loss is shrinking?
That's a really great point. And this is, I think, something really important to understanding what's going on with TDS right now.
Okay.
Obviously, a revenue drop isn't ideal, right? But that huge improvement in their net loss suggests that either their efforts to streamline operations or the benefits from selling off certain parts of the business are starting to have a real positive impact on their bottom line.
Interesting.
And those infrastructure investments, while they might be putting some pressure on earnings in the short term, are likely a strategic move.
Okay.
They're probably trying to position themselves better for long-term competition.
Gotcha. Okay. Well, now let's talk about some of the potential downsides.
Yeah.
One thing that jumped out from your sources was those net losses in recent years.
Yeah, that's understandable.
I mean, it definitely makes you wonder about their path to becoming consistently profitable.
Right.
And of course, the telecom market is intensely competitive. So there's always that pressure on, pricing and market share.
Absolutely. Those consistent net losses,
Yeah,
they're definitely something that investors would want to keep a close eye on.
for sure.
Sustainable profitability is so key for a company's long-term success. And as you said, competition in the telecom industry is fierce.
Yeah.
I mean, there are constant battles for customers, and everyone's always having to adapt to new technologies.
Right. But on the flip side, there are some positives too. Their diverse services, like we talked about, give them a more stable customer base.
Yeah.
And their investments in network upgrades and them looking at options for their subsidiaries, that could lead to future growth.
Right.
So how significant do you think those strengths are in this environment?
I think a diversification like that can be a real asset. I mean, having
Hmm.
multiple streams of revenue can be so helpful, especially if one part of the business isn't doing as well as the others.
Right.
And it sounds like TDS is really proactive, investing in infrastructure, thinking strategically about their different business units.
Yeah.
To me, that suggests they're really focused on the long game, you know?
Okay. Okay, that's good. So what does the market think? Currently, analysts have a buy rating on the stock,
Right.
and their 12-month price target is 53.50. That's almost a 50% potential upside from where it's trading now.
Wow.
Now, I didn't see a ton of public opinion online, but this analyst consensus definitely suggests some optimism about TDS.
I would say so.
Why do you think analysts are so positive?
Well, that buy rating and that, pretty aggressive price target, I think it reflects the belief that the move TDS is making are going to pay off.
Okay.
Especially the potential sale of their U.S. cellular operations
Right.
and that big focus on expanding their fiber network.
Yeah.
I think they believe these moves are going to lead to improved profitability, better growth, and hopefully offset that recent revenue dip we were talking about.
Okay, that makes sense.
Yeah.
So where does TDS actually fit in the market? I mean, obviously they're competing with the big boys, Verizon, AT&T, T-Mobile.
Right.
They're a smaller company, but it seems like they're really concentrating on specific regions, emphasizing their local presence, customer service. And they're making those investments in things like IoT solutions, network upgrades.
Yeah.
Could that help them carve out a stronger niche?
It definitely could. I think focusing on regions can be a real differentiator for a company like PDS. By really understanding the needs of specific communities and building relationships in those areas,
Right.
they can cultivate a sense of loyalty that, those big national players just might not be able to match.
Okay.
And those investments in areas like IoT show that they're not content with just the traditional telecom services. They're looking towards the future.
Yeah, that's smart.
Yeah.
So looking ahead, there are a few key things to watch for. Their next earnings report is in May 2025.
Right.
That'll be a big indicator of how their profitability is improving.
Definitely.
Their network investments are going to be crucial for providing good service and keeping those customers happy. And of course, there's always the risk of regulatory changes in the industry. Yeah. And that competition isn't going anywhere. In your opinion, what's the most important thing to be watching?
That next earnings report, that's going to be really key.
Great.
It'll give us a much better understanding of whether this positive trend in shrinking their losses is really sustainable.
Right.
And whether all these strategic initiatives they're undertaking are actually starting to show up in their financial performance.
Makes sense. One of the things you sent me was this super detailed due diligence report from 2025.
Oh, yeah.
And it kind of echoed some of what we've been talking about. It highlighted the revenue decline over the past few years. It pointed out that same 3.8% drop from 2023 to 2024.
Right.
But it also underlined the improvement in their EPS going from negative 506 in 2023 to negative 0.85 in 2024.
Okay.
Now, if you exclude certain losses, the non-GAAP EPS for 2024 was negative 0.11. It did mention their debt-to-equity ratio being kind of high at 69.3%.
Right.
But their 2024 operating cash flow was a healthy $1.145 billion. The report suggested their big competitive advantage is their established customer base and network coverage.
Yeah.
But they have some cost leadership challenges. So what does all this extra financial info really tell us?
Well, I think it reinforces what we've been discussing.
Agreed.
The non-GAAP EPS gives us a slightly more optimistic view of how they're doing operationally, by taking out some of those unusual one-time items.
Right.
But that high debt-to-equity ratio, that's definitely something to watch out for.
Huh.
That basically means they have a lot of debt relative to their equity, which could potentially make them more vulnerable to financial risks. On the plus side, though, that strong operating cash flow, that's a good sign. It shows they're generating plenty of cash from their core business.
Right. Okay. Well, the report also mentioned some pretty big news. Apparently, TDS and U.S. Cellular have agreed to sell U.S. Cellular's wireless operations
Really?
and some spectrum assets to T-Mobile.
Wow.
They expect this to close sometime in mid-2025, but obviously it needs regulatory approval. TDS also announced they're going to be expanding their fiber network significantly.
Interesting.
They're aiming for 150,000 new fiber service addresses in 2025, and they've upped their long-term goal to 1.8 million. How do you think all these developments will impact their future?
I think this could be a really big turning point for TDS.
Okay.
Selling off such a big part of their wireless business to T-Mobile, it suggests a pretty significant strategic shift.
Right.
It seems like they're going all in on wireline, especially with those aggressive fiber expansion plans.
Yeah.
They'll probably use the money from that U.S. cellular sale to fund this expansion. But of course, they absolutely need to get that regulatory approval for the T-Mobile deal.
For sure. The last thing I have here is their most recent earnings report. It came out February 21st, 2025.
Okay.
Fourth quarter operating revenues were $1.24 billion. That's down from the same period the year before.
Right.
But their net income attributable to TDS common shareholders was only a loss of $11 million. That's a massive improvement over the $523 million loss in Q4 of 2023.
Wow.
And they declared their first quarter 2025 dividends. So what's your takeaway from this last financial update?
I think it continues to point to what we've been seeing. Revenues are still declining, but they're getting way better at controlling their losses.
Right.
That huge reduction in net loss during the fourth quarter, that's really encouraging.
Okay.
It suggests those cost-cutting measures and efficiency improvements are actually working.
Yeah.
The fact that they're still paying dividends, even after some recent losses, might be a sign they're confident about their overall financial strength and that they're committed to returning a value to their shareholders.
Interesting. So looking at all of this together, your sources really paint a picture of a company that's in transition.
I would agree.
They're facing some revenue challenges, but they're making pretty big strides in cutting their losses.
Yeah.
They're making these big strategic moves, like that planned sale of U.S. cellular and the big push into fiber expansion. Analysts seem cautiously optimistic.
Right.
But there are definitely things to watch closely, like getting that approval for the T-Mobile deal and whether they can keep improving their profitability in such a competitive market.
Definitely.
So the million-dollar question for you, the listener, is this. How do all these shifts and potential market changes line up with your own investment goals and your risk tolerance?
Exactly. Are you okay with investing in a company that's going through such big strategic changes? Do you believe in their vision for the future? You know, focusing on fiber after selling off a big chunk of their wireless business?
Right.
These are the questions you should be asking yourself.
Absolutely. Well, if you found this breakdown helpful and want to hear more, please subscribe to our channel, like this episode, and leave a comment with any other areas you'd like us to explore.